Welcome to the first episode of Stately Investing with Burnett King. We're starting the channel today, everybody. I'm excited. So we are starting our dividend growth investing journey with YouTube here. And I wanted to say a big shout out to everyone who's given me encouragement to start the channel and to kind of start sharing the wealth. So this channel is going to be about dividend growth investing and passive income and how to make more money by doing lots of nothing, right? Compound interest. So really what I want to do today in this episode is kind of walk you through my portfolio and just talk through how I came to start and how I've, what my background is, and hopefully help somebody out there learn more about dividend growth investing and, educate folks on how to retire early or how to make passive income or, just learning more about finance, right? Like all of those objectives are valid, and hopefully this channel will help someone out there. That's why I'm starting it, and let's dive in, right? So what you guys are seeing here is my passive income portfolio or my passive income screen in M1 Finance. Shout out to M1 Finance. They're a great platform, completely free, and you can really do pretty much everything you want for dividend growth investing. The key and the reason I do my dividend growth investing through M1 is because it does known as a drip plan or a reinvestment plan, right? So dividend reinvestment plans will take your dividends and take your earnings and essentially reinvest them into the stocks that are already in your portfolio. And so what's great about that is I don't have to worry about, essentially taking the cash that I'm getting and then buying individual stocks and doing that. And M1 also balances it to how I have my portfolio set up. So why don't we jump right in? So passive income, you can see I'm at $10,871.77 today. Today is February 15th, 2020. And I have my portfolio into two slices. So M1 has this concept of pies, right? And you can obviously see, you can share this pie, right? I might send a link out to this so you guys can see what's in my portfolio. I'll include that in the links. By the way, give me a thumbs up or subscribe if you're liking the content. I'm hoping to have content every week or so, and we'll see how it goes, see how long the videos are and how much work it is. I also have a day job. I don't only just invest, but we'll go from there. So the pie concept, right? So pies have slices, and in this case, my passive income has two slices. So I have a custom dividends 60% and a custom dividends 40%. So how I arrived at this is because when I first started, I wanted very particular allocations of my stock, right? I was trying to mimic some portfolios that were out there, and trying to, actually I'll do a whole video on like how I first set up my M1 account and my portfolio, because that was super complicated, and hopefully for all you spreadsheet nerds out there, you'll like that video. But I have two slices, kind of 60-40, right? So they're not even, as in they don't have the exact same holdings in each. So why don't we just jump to my holdings tab so you can see overall. So this is the 100% view. You can see overall what are my holdings looking like, right? And we're by descending value here. So what I own the most of by dollar value, and then going down in value. So with dividend growth investing, I tried to pick stocks that are medium to high dividend yield. And what that means is they pay out a dividend for just owning the stock. It's essentially free cash for owning that stock. And as you hold on to that stock, they will continue to pay out that dividend, right? And so I'm picking companies that I think are financially stable, meaning they won't go out of business anytime soon. They're hopefully growing, but I'm not necessarily picking high growth stocks, not with this portfolio at least, not with my passive income portfolio. And I'm looking at things like how often do they raise their dividend. So in particular, people tend to miss the growth part of dividend growth investing, right? So the growth is the key part. So you might give out 10 cents in one quarter as a company, but I want you to grow over time, right? So either in the next quarter or the next year, you're actually increasing how much your dividend is, how much your yield is in particular. So yield is a function of share price. So how much you pay out might depend on what your shares are worth. But increasing that yield periodically is what I'm looking for because I want to offset inflation. So we can get more into the math. I know I'm throwing a lot of terms at you. We can get more into that in future episodes, but I want to pick companies that will continue to increase their dividend periodically. That way I know I don't have to sell or buy these stocks and try to time the market on when they're going to be most valuable. What I care about is that cash flow coming into me is growing without me having to do anything. So you can see the kinds of companies I have here are a mix, right? So it's a mix of oil and gas companies, telecoms, consumer goods, healthcare, finance. It's really a mix of everything. Pharmaceuticals, tech companies, right? It's a mix. And I've picked these companies for various reasons. And what I might do, if you guys are interested, let me know in the comments, is kind of an analysis of each company in my portfolio, right? There's some REITs in here as well. So real estate investment trusts are known to pay out high dividends. But you also have different tax implications with REITs. So I try to diversify across different sectors, if you will. And so as we go through the portfolio, you can see right now I own the most in ExxonMobil, right? So I own almost $600 in ExxonMobil. What you'll also notice is that ExxonMobil has been getting hammered in the stock market. It's down, since I bought it, about almost 11%. And so people might typically think, well, if you're losing, 11% on a stock, why are you keeping it, right? And you're forgetting the DGI principle here of it's still paying out a good dividend, right? So my dividend is pretty stable with Exxon. They've been paying out, for a very long time and increasing it for a very long time. This is not necessarily a fast growing stock, right? Like it's not something that is targeted to grow significantly in the next period of time, but it's something that I'm willing to keep in my portfolio as long as they don't cut the dividend. Now, whether or not I should have so much of my portfolio allocated to Exxon is another question. So why don't we jump back to the portfolio tab here, and I can jump into my 60% slice of the pie. And you can see I have Exxon at 8%. So it's the highest portion of my portfolio. So around 8% of this is the target, and it is the highest of any of the companies in the 60% slice. You can see I have some things that are at 1% that are actually, kind of performing better from a overall percentage standpoint, right? And what I might do in March I rebalance I evaluate my portfolio every month or so. I might decide to lower the target allocation of Exxon and raise some of these things that have lower percentages, because I also don't like having things that are super low in overall value, right? Like I want things that have a significant portion. Otherwise, why am I owning the stock? So it's a little hard at this amount, and to some of you might be saying, well, at $11,000, that's a lot of money, and it is, right? Like I've built it up over time. So we started on September 5th of 2019, and I've just been investing when I can, right? Like I've set up some periodic investments. So every 2 weeks, I invest $500 into this passive income fund. So that's $1,000 a month. But I'm trying to say at like $11,000 or so, right? It's oftentimes hard to have like a significant portion in any one company. Given the amounts that I have, the number of stocks that I have. You can see in my 40%, some of the numbers are even lower, right? Like if I only have, some 1% values here, that means I'm only holding like $40 of AT&T in this slice of the pie. So let's jump back to holdings and we can look at some other things here, right? So if we look, I have a total of 42 holdings. So that's 40 individual companies. And overall, that cost basis, this is what I've purchased them for over time, right? It's $10,436.88. And my unrealized gain on that is around $434. So that totals up to that 10,871.77. What's interesting is that unrealized gain is 4.17%, but when you go back to this, it actually says I have an 8.3% return and $563.43. And so what's the difference? You can see these earned dividends of $103, right? And so that's just $100 of free money. And so that's what dividend growth investing is about. It's about making sure that as you invest money, your companies that are doing well and paying out those dividends are paying out enough chunks of money that they will compound, right? So compounding interest is a key lesson, and hopefully you guys know about that, but if not, we can do another video on compound interest and how that works. So compound interest will make this grow over time, right? So even if my market gains, like if the market tanks here, as everybody's predicting it will at some point, if the market tanks, hopefully the companies that I picked won't cut their dividends, and so I'll still continue to earn those dividends at the same rate or even growing, and still continue to see some gains despite market losses. So that's where passive income and dividend growth investing can be a kind of safer alternative during rocky times in the stock market. So I really want to kind of make sure that this portfolio is stable. Like I said, I evaluate it monthly. So why don't we jump in to show you kind of the past set of dividends that I've had here. So you can see I kind of evaluate when I started, and then at the end of every month, I'd look at where my overall fund size is and how much dividends I'm getting and how much my dividends are growing. So you can see that first month, right, really it was about 25 days here. I only earned 85 cents in dividends, right? So I invested about 4,500 in my money throughout those 25 days, resulting in only 85 cents in dividends, right? And so that's not a lot. It takes a while to build up some of these dividends, and we're just getting started, right? So we're only at $23 last month, and you might say that's nothing, right? $23. That can't even buy you a lunch at some places. But if you look at it compared to 85 cents when I started, it's actually quite a bit, right? So we've actually grown quite a bit. And so we can get more into the tracker in future episodes and like how I generate this. And you can see here from the graph, like this visually shows that increase, right? So from 85 cents at the end of September to $8.23 in October, that's quite a jump, right? The end of the year here, I was at $21.55, also quite a big jump. So a lot of this has to do with when companies pay out their dividends, right? So it's going to be a little up and down from month to month, but overall the trend should be increasing, right? I should be looking at this graph every month and I should be seeing increases, or at least the overall trend should be increasing. And so with time, I'm making enough money to support myself without having to work. That's the goal, right? So I want to talk a little bit about my goals and why I'm doing this and why I'm spending time and energy. I would like to retire at age 55, right? So I'm 38 right now, so that gives me 17 years to get my act together. And so this isn't my only form of investment. I have other investments out there, right? I participate in my 401ks, and I have some IRAs and some other investment strategies out there, and we can do a whole other video on like my entire portfolio if that would be helpful. Let me know in the comments. But yeah, this is really a way that I saw that I would not have to kind of work well into my 60s or even my 70s to support myself and to support my family. And so I want others out there to start learning about it and start taking this journey with me, right? Like it's something that I think the more you educate yourself on it, and if you think this is a strategy that'll work for you, it really will set you up for success in the future. Now, investing isn't, always going to be smooth, right? Like obviously this graph here has been growing since I've started, but there may come a time when the market drops, and you have to be the type of person who's willing to be okay with that. And luckily, passive income and dividend growth investing will temper you from some of the sharp drops. It might also temper you from some of the sharp increases in the market, right? Depending on what companies you're picking. But long term, that strategy will help me to retire early, right? Like if I want to shave 10 years off of of working, then I need something that will help me do that. And I think, in my opinion, dividend growth investment is the best way to do that. So I think I'm going to cut the video here. This is just the intro. I wanted to start with my first episode and see if this is helpful to you guys, and let me know. I definitely have some topics planned for the future. So you can reach out to me at statelyinvesting@gmail.com. This is Burnett King again with Stately Investing. I hope you guys enjoyed the first episode.